5. Frustrating health insurance tactics and the reason behind them. Health insurance is meant to provide a safety net during medical crises, but the practices of some insurers can feel like navigating a bureaucratic labyrinth. Patients often find themselves battling red tape while trying to access essential care. Here are 5 of the most frustrating health insurer tactics, real-life examples of their impact and the reasons behind these practices. 1. Prior authorization delays. The problem. Before undergoing certain treatments or getting specific medications, patients must obtain approval from their insurance provider. This process, known as prior authorization, can take days or even weeks, delaying urgent care. In 2022, a cancer patient in California had their chemotherapy delayed by 2 weeks because their insurer required prior authorization for a newly prescribed treatment. Despite the oncologist's urgent requests, the patient's condition worsened while awaiting approval. Why it exists? Insurers argue that prior authorization ensures patients receive appropriate and cost-effective care by preventing unnecessary or experimental treatments. However, critics claim it often serves as a cost control measure, reducing payouts by discouraging or delaying treatment. 2. Denials. Based on technicalities, the problem. Claims are often denied for seemingly minor reasons, such as coding errors, missing documents, or lack of medical necessity, forcing patients and providers into lengthy appeals. A 2021 report highlighted the case of a mother in Texas whose claim for her son's urgent surgery was denied because the procedure was deemed out of network, even though the hospital was listed as in-network. It was later revealed that one assisting anesthesiologist was out of network, resulting in a $30,000 bill. Why it exists? Technical denials allow insurers to minimize payouts. By placing the burden on patients or providers to resolve disputes, insurers can save money, knowing many will give up on appeals. 3. Limited provider networks. The problem. Insurers often restrict coverage to a narrow network of doctors and hospitals. Patients who see providers outside the network face significantly higher costs or outright denials. A Massachusetts resident needed a specialist for a rare autoimmune disorder. The only qualified provider in the state was out of network, leaving the patient to pay over $25,000 out of pocket. Appeals to include the specialist in coverage were denied, citing contractual restrictions. Why it exists. Narrow networks help insurers negotiate lower rates with a select group of providers. While this reduces premiums, it limits patient choice and forces them into potentially suboptimal care arrangements. 4. Step therapy, fail-first policies. The problem. Step therapy requires patients to try and fail on less expensive treatments before insurers approve costlier options, even if doctors recommend the latter. In 2023, a rheumatoid arthritis patient in New York was forced to use a generic medication that caused severe side effects before their insurer approved a biologic treatment. The delay exacerbated their joint damage, requiring additional medical intervention. Why it exists. Insurers use step therapy to control costs, encouraging the use of generic or cheaper alternatives first. While cost savings are the goal, critics argue it prioritizes financial considerations over patient health. 5. Frequent policy changes. The problem. Insurers often update coverage terms, altering what is included, excluded, or subject to higher copays. Patients may suddenly find their medications or treatments no longer covered. A diabetic in Florida relied on a specific insulin covered under their plan. Midway through the year, the insurer switched to covering a different brand, forcing the patient to pay higher costs or adjust to a less effective medication. Why it exists. Policy adjustments allow insurers to renegotiate contracts with pharmaceutical companies and healthcare providers, often aiming to cut costs. Unfortunately, These changes disrupt continuity of care and burden patients financially. The bigger picture: while these tactics frustrate patients, they are rooted in the health insurance industry's goal to balance cost control with care provision. The U.S. healthcare system, with its emphasis on profit-driven models, incentivizes insurers to reduce payouts and negotiate lower prices aggressively. However, these practices often come at the expense of patient well-being. What can be done? Policy reforms. Legislators can enforce stricter regulations on prior authorizations, denials, and step therapy. Transparency. Insurers should provide clearer explanations of coverage and denials. Patient advocacy. Patients must be empowered with tools to challenge unfair practices. Navigating health insurance may remain challenging, but shining a spotlight on these practices can drive change, ensuring that the system prioritizes patients over profits. Comment and subscribe if you like this video.